The price of Bitcoin is crashing. Is it time to panic? No, don't panic. Never panic. The top is not even close to being in for Bitcoin. In today's video, I'll be breaking down the technicals and what you need to know about the current market situation for Bitcoin. My name is Lark. Every day I make videos talking about cryptocurrency investing. So if that's a topic you'd like to learn some more about, maybe just stay up to date with, then you should definitely subscribe to the Lark Davis channel. Also, you can take a quick second to tap on that thumbs up and for the YouTube algorithm. Massively appreciate that. Anybody who wants to receive notifications should also click on the notification bell. By the way, if you are a cryptocurrency trader, then you need to get yourself an account over on Femex. You can long and short all of the top coins in the market. Bitcoin, Ethereum, Solana, Cardano, they have all of the good stuff. And right now they have an amazing promotion going on where you can get up to $3,500 worth of trading bonuses. So if you use the link down below, you're going to get 10% off your fees, the standard $100 trading bonus promotion, as well as an extra $3,500 deposit bonus, depending on how much you deposit to start trading with. Just use that link to start your account. Now let's go ahead and get into the charts. So the old bearish divergence here has basically been playing out to a T. We've seen, of course, the price of Bitcoin coming down today. Now, I think it's really important to bring a bit of perspective into this here. We can get the RSI off here for now. I think it's really important to bring a bit of perspective into the market and try to understand how things are currently playing out and how serious the current situation is. So far, up to this point, the price of Bitcoin is only down, well, at its peak today, was only down 11.5% from the recent all-time high back here on the 10th of November. Now, back in October, we had a 14% peak to bottom move. That was a bit of a bigger move by a couple percent. And look, I would like to point out this because this is probably even more important for you to kind of take into appreciation here, is that your average Bitcoin correction during a bull run is 20% plus. So we haven't actually seen a big 20% move for the cryptocurrency markets in a little while now. Last time we had one, of course, was back here, early September. This was a 24%, 25% top to bottom move. That fit in very nicely with what you typically see happening during a cryptocurrency bull run. These kinds of big volatile moments are super common. They're to be expected, anticipated, and made advantage of when they come. Now, this time back here in September was a great time, of course, to buy. Buying when the market's down by like 25% like this in what is, still a beautiful, uptrend for the market tends to be a pretty damn good time to get yourself a position. Now, of course, that was led by the 20% flash crash, but it did finally bottom out around 25%. So just to give you that perspective that the current 11.5% crash is nothing. That's nothing. That's literally a Tuesday in Bitcoin. Literally a Tuesday. Nothing too exciting going on here. Now, look, if we actually came back down for a 20% plus kind of move, where would that bring us? Well, it'd bring us back down to this very important area of price resistance, flipping, of course, into price support. So that is around $52,000, $53,000. That would be a 23% correction down. If we came up to this more recent area of price support in this zone, it'd be 17, 18, 19, 20% down around the $55,000 mark. Now, I'm not saying that's our most likely scenario where we're going to see the price heading. I'm just giving you that for reference to understand that this is a volatile market and volatility is to be expected. It's totally normal. I've been talking about for the last few days that we could see Bitcoin coming back down to retest some of these key areas of price support. So now we're currently right around the $62,000 price support area. Our next major area you want to be watching out for is, of course, $60,000. I'd be curious to see whether or not we are able to have another test on this trend line right here. We'll see, of course, over the next few days if we get another test on that coming down, but we might break through that and of course come back down to hit $60,000 or an even lower number moving forward. But does all of that mean that the bull run is over? We're never going to see another new all-time high price for Bitcoin, that this market cycle is finished? No, I do not believe that for a second. Bitcoin is going to go to $100,000. Now, will Plan B be proven right and we're going to get a $98,000 Bitcoin by the end of November? Who knows? That would be great. It's looking less likely at this point, but anything, of course, is possible in crypto. I think $100,000 Bitcoin by the end of the year, still definitely on the books. And look, if I'm wrong and we don't get $100,000 Bitcoin this year, it's just an arbitrary time date anyway. Then we'll get $100,000 Bitcoin in Q1 next year. Oh no, have to wait a few more weeks. Big drama that, big drama. Here we can see, by the way, we were talking about the price of Bitcoin coming down to, if we did have a 20% price correction, so in this sort of $53,000 zone. Now, where has an incredible amount of supply of Bitcoin been transacted at? So we can see here, this is the realized price distribution for Bitcoin. The volume of Bitcoin last moved above $1 trillion market cap, has now reached 3.45 million Bitcoin. This means that 18.3% of the supply was transacted above $53,000, demonstrating a lot of capital inflows. Now that means that all these people who bought recently, they're not going to want to realize losses necessarily. Some of these people will. If the market does turn quite bad, these people will sell at a loss, right? The buy high, sell low crowd, those guys love doing that stuff. However, a lot of this is going to be institutional money coming in, big money from funds and family offices, all this stuff. These guys are able to ride out a price move from $58,000 down to $55,000 or $50,000 or $62,000 down to $52,000. These guys are okay with that because they're investing in a store of value asset that is a long-term investment for them. The tourists, those are the guys that will be, buying at $69,000 and capitulating at support down at $53,000 or whatever, if that were to happen. But I just bring this up because it's really important to understand that a lot of Bitcoin has changed hands above the $53,000 mark, meaning there's a lot of people bullish on the future of the price of Bitcoin going up, of course, and that a lot of that will be hopefully stronger-handed money. But I think this makes the mid 50,000 zone a very, very key area of price support for Bitcoin. So, like I said, I'm not sure we're going to get down that low during this price correction, but it would fit within the norm of what we see happening for Bitcoin. We can also see that open interest is still mega high. So we are still seeing open interest rates just at record highs, basically. So we did get a new record high with the all-time price high for Bitcoin back here. And now, of course, the open interest is still incredibly high. Now, what usually happens when we have super high open interest is that we have a lot of volatility. Now, we haven't had any extreme open interest volatility yet, so we could see some more price volatility coming in as we see more of the over-leveraged traders being washed out a bit in the market. So that's still something to keep in mind there, as well as can, of course, create those cascading effects for the price when these start moving. Also, we've seen Ethereum breaking through its uptrend. So the uptrend has been broken. Of course, we can see this uptrend has been in place here since back in October. Been a beautiful uptrend. However, that uptrend has now broken. We are seeing it falling down below that. We do have a major area of price support, of course, for Ethereum here around $4,000. So that would be a very key area of price support, I think, for Ethereum to hold, not only, of course, being just a big, beautiful round number, but also chart-wise lining up as a major area of price support for the asset. So with both Bitcoin and Ethereum, the two premier cryptocurrencies, just together account for more than half of all of the value in the cryptocurrency market combined, hitting downtrends, we could be in for a bit more turbulence before we move on to our next new all-time high. Here as well, just again, a reminder of perspective for you and how volatility is just such a normal part of this market. So this is the chart from 2017, actually. So in 2017, November 2017, we had a 29% drop for Bitcoin. So we had a beautiful run up. Boom. 29% actually over like 5 days. It was pretty crazy. And then we had a single day in late November where we had a 25% flash crash. Man, that was crazy times. And yet, in spite of all of that price drama, the month still finished 55% higher. How crazy is that? How crazy is that? In fact, from the mid-month crash, where we saw the price go down by 29%, to the recovery to the end of the month, and even with that big flash crash that happened, we still saw the price of Bitcoin go from about $7,800 to over $10,000 by the end of the month. So it just goes to show you, this is a volatile asset class, and the volatility in the price is a completely normal feature and part of this market. The sooner you get on board with that, your life's going to be so much easier. It's true. It's true. Now, let's talk about the top not even being close to being in. This here is the Mayer multiple. So we can see that this chart here, we have got basically what we need to know is that this line right here shows the bottoms of the Mayer multiple. After these bottom out scenarios, what do we tend to see happening? Well, we tend to see the price of Bitcoin. I'll get myself off the screen there for you. We tend to see the price of Bitcoin rallying afterwards. So we can see here, we had a bottom on the Mayer multiple, followed by a major rally. We had a bottom followed by a rally, right? We had a sort of, I guess, maybe a false bottom, you could say that, followed by a short-term rally. Then we had a bottom over here, followed by what was basically a massive, massive bull run. This kicked off a massive bull run right here. And of course, we had a big bottom here, followed by another massive market rally, a double bottom here, followed by a big end of year blow off. So we have recently actually hit a bottom scenario here. So that was back in July. We actually hit a bottom. So a bottom tends to indicate that we have a new liftoff coming. Now we can also see that all of the bull markets have finished previously with these massive, massive spikes. So we can see here, of course, first bull market, second bull market. This is actually the peak of the second bull market here. This was the first big run up of it. Third bull market here. This is sort of the mini bull market that happened within the bear market back in 2019. And this has been the 2020, 2021 bull market that we've seen here. So now we're getting ready for the next phase. We're getting ready for the 2022 bull market. We're getting ready for the next major run up. And we can see as well that this particular distance away from the 200-day moving average here did not show the extreme level of divergence that you would want to see in a market top. So you can also see here on the pricing bands that we also want to see a stronger divergence above the top line here. So this is a chart showing me that we are not close to a top yet. Also wanted to share this chart by Kevin Svensson. I really like this chart. I'll bring myself back on the screen here. But I really like this chart from Kevin. I think it's very interesting to see how close some of these charts are working with one another. So this is the 2011 gold charts compared to Bitcoin 2021. Of course, gold and Bitcoin, both store of value assets. The charts between gold and Bitcoin have had some incredible similarities. So this is his 3 peaks and a domed house chart. So as we can see here, the 3 peaks have come in. We've had our basement, which is the bear trap, the first floor, which we are still grinding our way through. And then of course we are looking for the roof, which will be the blow off top here for the market. That is, of course, what we are keeping our eyes out for here. And of course, after the roof, which who knows how long that's going to take for us to get. Maybe that comes in December. Maybe, as I've been saying, we're more likely to see the bull market rolling over into 2022, where we're going to see the peak price coming for Bitcoin. Maybe it's going to be in Q1, maybe it's going to be, early Q2 or something like that, and then we'll go into a bear market after that. Now, what's interesting too about the similarities here, and I wanted to bring up, is that actually, what happened to gold afterwards, unlike previous Bitcoin cycles where we've seen 85-90% drops, gold actually only corrected by about, I think, 48 or 49% from its peak to trough. It was a multi-year bear market for gold. Right after that massive run-up, it was a multi-year bear market. Things got pretty brutal for the old yellow metal there. But it was only a 50% decline, which I'm thinking if we see Bitcoin get up to $150,000, $200,000, and then it only retraces by 50%. Imagine that. Bitcoin goes to $200,000, 50% drop back to $100,000, and that's the bear market bottom. That would be crazy. That'd be crazy. I'd love to see such a scenario, because it means that anybody who's buying Bitcoin today will be in profit during the bear market, which I tell you, makes it a lot easier to hold your Bitcoin when it's in profit versus when you're just holding heavy, bloody bags for a year or two. Very different psychologically for you. But yeah, I love this chart. Shout out to Kevin there for sharing this cool chart. I really like that. And this one here from Glassnode. So this is the Bitcoin top cap price model. So this is originally proposed by Willy Woo, calculated by applying a factor of 35x to the all-time average cap. So basically, what you need to know about this is that this puts Bitcoin at a $4 trillion valuation with a top price around $214,000. So that's where we would see the blow off top happening for Bitcoin. That would be the bull market peak at $214,000. So basically we get up to touch this red line here. That's okay. I'd take that. $214,000. Sure. That sounds fine by me. I'll take a 214K Bitcoin. Not a problem, man. Not a problem. That sounds just fine. By the way, here's the final thought for today. Sometimes when the price goes down by a few percent and you go and you look in the comment section or hop on social media, the sentiment is, game over, man, game over. The reality is the game is never over in markets. Even bear markets offer incredible opportunities, right? You just keep investing, keep teaching yourself, you keep learning, you don't give up. What happened to a lot of people back in 2017, they came in late, they bought the top, they sold the absolute bottom, they stayed out of the market for years, and some of those people are now back buying high again, and they're probably going to sell low later. Volatility in markets is completely normal, as I've showed you at length in this video. If you keep yourself focused, you are going to do just fine in this market. You have to have that long-term game mentality. And if you can play the long-term game, then you'll realize that winning is a near certainty. Anyway, just my 2 Satoshis for the day. Your question: how deep do you think that this correction could go for Bitcoin? Are we only going to go down to like $60,000? Could we go down to the lower 50s again? Or is that it? That's it. Bear market on, baby. We're going down 90%. Curious to hear your thoughts down below in the comment section. Thanks so much for watching today's video, and peace out till next time.